Welcome to Simply Ideal HQ. On this podcast, we engage thought leaders on topical issues around law and business in the most simplistic manner.
Hello everyone, welcome to episode 7 of Simply Ideal HQ. On this episode, we will be doing an expose into the global Islamic finance market in a bit to understand the core Sharia principles that underpin the market, the available products and services, the market segments, and the short and long-term outlook opportunities within the Nigerian alternative finance market. Joining us today is the CEO and co-founder of Trust Bank, Arthur, a thought leader and recognized expert in ethical finance, alternative finance, and non-interest banking. Please make welcome Dr. Bashir Oshodi. Dr. Oshodi, it's a privilege to have you as our guest today on Simply. I have no doubt that our listeners are eager to get practical insight into the rudiments of Islamic finance in a market that boasts of an over $2.2 trillion asset base, and which has now earned its pride of place in contemporary mainstream financial markets. Without further ado, please permit me to jump right into the first question for today. In simple terms, what is Islamic finance, and what are the financial Sharia principles that underpin the Islamic financial market?
Okay, so Islamic finance is a subset of the Islamic economic model. You know, the Islamic economic model is, I'll say for me, is wider than conventional in economics. It has got several parts. You know, so Islamic finance is just a little part of it. Basically, Islamic finance prohibits interest, basically. But it stands on three other pillars, apart from prohibition of interest. It doesn't allow gambling. We define gambling in a unique fashion. It doesn't allow uncertainty, transactions that have elements of uncertainty. And of course, it doesn't allow, anything, a set of scholars, Sharia scholars, those who understand fiqh muamalat, that's Islamic commercial jurisprudence. What anything they say is not allowed, is also not allowed. So even if you see a regular transaction, it looks normal, a regular business, it's not alcohol, it's not tobacco, right? It's not anything, it's not ammunition. But Sharia scholars feel, hey, for one reason or the other, this transaction is not compliant, then it's not compliant. So Islamic finance stands on these four major pillars, on the one hand. On the other hand, most of the time, transactions needs to be transaction-based, or if you like, asset-based or asset-backed. There has to be something. And where there's nothing, then it will have to be based on some kind of benevolent act. Again, by the time you start to ask your question, I'll start to address all these things even further, right? So Islamic finance prohibits these four things, allows, an entity, or should I say allow a product to be there, or an asset, or something you're trading in, or you're doing business in. So if you come to me and say you want $1 million naira, I want to know why, as a bank, if it's for personal use, then it could be benevolent. If it's a guarantee, yes, it's going to be benevolent to say, okay, you want a guarantee, you want it because you need it, So there are ways we treat a lot of these things. But again, the first most important thing is, what do you want to do with the money? It's on the basis of that we start to map out, or fashion out, or mold, or if you like, or craft, the application of the contracts or the instrument under Islamic finance. Yeah.
Okay. So what then is the attraction for people who are into those sort of services? I mean, if you're limiting, we can't do this, we can't do that. What makes people consider, Islamic finance?
Okay, so the truth is, for everything in conventional space, you can actually, you can have the Sharia compliant version of it. Virtually everything. In the beginning, if you look down history line, the first set of transactions were simply to mimic, what you have in the conventional space, just mimic them, repeat them, copy and paste them. However, not just copy and paste, in line with the rules of Sharia. to a very large extent. So if you want to travel, if you want to buy a travel ticket, if you want to pay your children's school fees, or if you want to pay hotel, these are services to a very large extent. There are ways to treat it, under Islamic finance. There could be scholarly arguments, around how best do you, give cash to somebody that wants to pay school fees. Okay. So then look at the contracts that we have within. So the contract has framework, right? It's equity debt services, right? From a very broad category. From that broad category, then start to look at the ones that applies the most. And where there's confusion, which happens sometimes, a lot of times, something unique, then go back to the Sharia scholar and say, hey, scholars, we have a problem here. Can you help us identify or interpret this? Or would you accept this model we're coming up with? Now, the reason for that is to prevent things that are not allowed. For example, you cannot do sale of debt. So what you call, what you have as a derivatives today, when you trade on debt, and trading on debts, which of course led to the global economic collapse, in 2006, 2007. Yes, it's a result of trading on debt. You just keep piling up. You keep creating products around debt. We're paying now instead of debt. That's not allowed. So again, most things are allowed. You can mimic practically everything. However, you should avoid out of interest, gambling, uncertainty, and ethical concerns to a very large extent.
Okay. Thank you very much. So you had spoken briefly about, the history of finance, but we want to go a bit deeper. So Islamic finance has undoubtedly found its way into the mainstream global financial markets. But can you explain the historical growth of this kind of finance and its significance to global economic growth?
Okay, so let's go down history line a little bit. You have the, of course, the colonial masters all over the world. You have the economic theories, the neoclassical economic theories started to emerge from the beginning of the 20th century, the likes of Alfred Marshall, and all of that, the great scholars. Of course, you had the likes of Karl Marx, their own unique propositions just before Alfred Marshall and co. Now, and before then, you had great scholars like Adam Smith, influenced by the church. Most scholars were influenced by their, Christian or Jewish heritage, and so while economics was expanding, when calculations started to come into economics, especially started looking at the works of Alfred Marshall, calculation came in, even though of course it was also heavily influenced by the church and the Bible. Now with these calculations, a lot of things, were absorbed. They were absorbed. As a result of that, interest was then seen as something that is fine. If you look at the great scholars, Christian scholars, 3, 4, 5 centuries before now, they had prohibited interest, and then, over time things started to change, especially with regard to definition of money. Definition of money changed from just, so in those days you have gold or silver, right? So money was, a means of exchange because it was gold or silver, it was a means of deferred value, it was a means of store of value, and all of that, but by the 60s, when a lot of the Muslim countries had to have independence, they realized that hey, there's a problem here. The economic model that we're fashioning, learning from the colonial masters, did not align with the rules, of Sharia. So they decided to define money first, which was a very important part of the entire storyline. Okay, what is money exactly? Because at some point, we were even confused that, okay, interest is, it's said to differentiate interest from usury, before the 60s, of course, even into the 70s, and they say, hey, where there's excessive charge, that is what's not allowed. Where the charge is minimal, it's fine. But scholars sat, I think early 70s, globally, Islamic scholars, and redefined money, and of course, interest, to say, come, anything you add on money itself, or you take from money itself as a condition for loan is interest. So that definition became clear. On the backdrop of that definition, we then started to build theoretical Islamic economic model, right? Into the mid 70s, and of course, then you had the likes of Islamic Development Bank. They came into action, set up in 1974, start operation in 1975. And of course, from there, there was a gradual growth, of the market in terms of this new proposition from theoretical to practice, and then that has then, of course, on the base of that, we've started to build. If you look at the works of Islamic finance scholars, in the 70s and the 80s, you'd be like, what's this? What are they writing? It looks so abstract, Again, they needed to put the economic theories they knew very well, from conventional economics. They needed to inject it perfectly well into Islamic economic model, and all of that, And I was one of the scholars sometime, and he said, hey, Bashir, I wrote in the 70s. When I look at these writings, I'm like, did I actually write this? But by the 80s, a lot of things started to change, reality started to set in. But again, for those that did very well, the likes of Malaysia and co., they didn't have a choice at that time because they had to learn from theories to mix up a lot of things, what was fully compliant, what was not fully compliant within the realm of their school of thought, they needed to grow the industry, and because they based their own economic model on what I'll call the interior economic model, right? With the picked from Japan, from South Korea, from the Islamic economic model from the West. So they picked those sort of models and they made it work. And so today, it's like of Malaysia, they've done fantastically well. Where they've made mistakes, they've adjusted over time very quickly. And on the backdrop of that, you started to see massive growth. And of course, the GCC also started to emerge quickly, with their own understanding of Islamic finance. And so, the growth you talked about were about, almost hitting almost 3 trillion thereabout. It's not been bad. Could have been better. Average growth of about 20%. Globally. In the case of Nigeria, we're going to go there. It's an exceptional case. I'm struggling to understand myself. I hope I quite answered your question.
Yes, you did. So one thing that's been consistent in what you're saying is that Islamic finance is something that's growing, and there's always there's always room for improvement, where a new idea comes up. So I have one other question. So a school of thought has been argued that Islamic finance will only reach its full potential through digitization and innovation. To buttress this point, Organization of Islamic Cooperation countries are reported to be recording about 21% growth year on year in this industry. But in Nigeria, there doesn't seem to be much traction on, Islamic fintech or innovation generally in this area. So what do you think is responsible for this lack of development?
Okay, so globally, they've got a lot more experience. Again, they started to experiment things from the mid-70s, into the 80s. So they tried a lot of things, a lot of these things have worked. So if you pick the UK, for example, the UK only came into the UK, way back, 1984, 82 thereabouts, 82, the UK started to come up with Sharia compliant products. They started to experiment, made mistakes, they corrected themselves. Again, of course, they had to align with their own understanding of finance, which is fantastic, the most sophisticated in the world. It's not the most sophisticated, the concept of credit cards, and all of those products, called mortgages, if you like, home finance. That's what we like to use. So they built all of this over time, slowly and gradually, and they learned quickly. And then you had this massive knowledge base, sitting everywhere, in Europe, in Malaysia. And so because of that knowledge base, people understood this thing very quickly. Bankers quickly converted to, Islamic finance, and also, so again, as we're growing in banking, we're growing in fintech, so in more advanced economies, there's one single most important thing in advanced economies. That is address. You must have an address. If you don't have an address, you can't do anything. You must have a proper, on the platform of having an address, everything is then connected to you. Of course, when phone started, you must connect your phone numbers, you must collect your bill from home, you must get your bank statement at home, so you could track a lot of things, right? Everything can be tracked very easily and very quickly. On the platform of that, there was good security, IT security, And the back of IT security, it then became so easy to build a lot of other things. Look at something, a product, a company like PayPal, for example, I don't know whether, if you try to send money from Nigeria, it's going to go, but it's because they cannot pinpoint where you are, who you are. no proper identity. Now because the foundation for tech products in Nigeria is very low. The foundation is low. A lot of people still don't have address. Something as simple as address, people don't still have. We cannot. When I was one of the banks, a while ago, somebody went to the ATM. They actually used a fake card or something, but it got money out of the ATM. They saw the person's face, quite all right. They played the video in the office. So this is the guy that stole the money. What's next? You can't get him. There's no way to track that person. And so if there's actually fraud or something, you're going to struggle to find what the person is. So because IT security is weak in our part of the world, building so much on it, is then not going fast as it should be. So if you look at the UK, for example, in terms of Islamic finance, fintech, they've gone ahead of even Malaysia and GCC countries. And that's because of their strong foundation for, financial inclusion and for, identity, if you like, management and all of that. So in our case, yes, a lot more growth in that area now. Looking at tech-related transactions. Again, of course, with mobile phones, coming in. When President Obasanjo was president of Nigeria, that has led to a lot of improvement. A lot of foreign direct investment coming to Nigeria now. The kind of monies that even the Islamic banks have not seen. It's going to fintechs and tech-related transactions. So we're getting there closely, but the foundation is still weak. So when the foundation is weak, it's just it's just you can't build too much on it. It's just going to collapse. And that's what they've done very well in more advanced economies.
Okay. Thank you very much. So sukuks, which are Islamic bonds, they've become one of the most prominent financing instruments globally for infrastructure development. They've also been embraced and promoted by the World Bank, IMF, and other development financial institutions. Do you share the view that the opportunity for sukuk investment is being driven by the fact that conventional financial institutions seem unable to bear the financial burden for growing global infrastructure needs? So the question is the fact that people are turning to sukuks as a source of finance for development of infrastructure. Does that say something about the already established routes that they could have taken? So what is it about Islamic finance and sukuk bonds that is attracting people instead of conventional financial means?
Okay, let's start with more organized economies, right? So if you look at the development of France or Paris, for example, after the Second World War, there are challenges too. There are slums all over. They needed to regenerate the system. The urban system. The cities. They became they're destroyed. As a result of the war. And so and the gentleman came in and said, "Well, we're going to get long-term funding, right?" So for urban regeneration to take place in Paris, everything went into the 50s and into the 60s. They decided to organize the bond structure because it's longer term, it's more patient, and then in order to pay back the owner of the fund, and they perfected well, of course, amazingly, even New York, they decided having their master plan, their housing master plan, for example, and their urban master plan, even just into the 60s, 70s, and that helped them to get long-term funding to develop and do a lot of great things. So for me, I've tried to study all the economic models, really. To be frank, all of them, from classical to neoclassical to what we call dependency theories and what we call the world system theories and all of that. And of course, Islamic economic model. These economies were built on the backs of the interest-based system. And they're not doing badly. You come to the UK today, everything looks so organized. You go to US, you go to Hong Kong, you go to Singapore. They built lovely infrastructure on the back of conventional finance. Right? So I wouldn't say conventional finance has not worked. It has not worked. It has worked perfectly well. To be neutral. To be neutral. So for those of us that find ourselves one leg in academics, we've learned to be very neutral, because at the end of the day, these economies are organized, very organized, and it's on the back of conventional finance. However, the thing about Islamic finance is that Islamically, there's provision of interest. Interest is not allowed. And so while we're trying to be organized, trying to have lovely cities and trying to get things done, trying to create lovely bonds, we thought that, okay, no. Because we want to have something that's Sharia compliant, we then prefer that it's sukuk rather than bonds, right? Because Sharia compliant. So the purpose is to serve the same, the same intent as the bond. We have achieved lovely bonds in Paris and New York, all of these countries over time. We want to achieve the same thing, really, the same thing. Now, if you look at Nigeria, or Africa as a whole, it's a different ball game, because, so when the World Bank tried to measure good governance, they had good governance indicators: control of corruption, political stability, rule of law, government effectiveness, and all of these indicators. When they tried to measure them, they realized that we're so weak in them. And so that then weakened the institutions also. As a result of this weakness, even when you have the conventional bond that helped Paris to become a modern city after the Second World War, or that made New York to be renewed, from the 70s, to be renewed every from the 70s, you realize you can't achieve the same results, in our part of the world, because of the weakness of the good governance indicators, and more importantly, of course, that then led to weak institutions. So now, so the question now is, maybe Sukuk can give a better result, right? Again, to achieve the same result, because in the case of bonds, in more, if you like, emerging economies, what I call struggling economies. In the case of struggling economies, if you issue a bond right now, you don't know what the money, you cannot really say, hey, here's the project that the money has been used for. You can't see it. The time we had a session with, one of the organizers of bonds in the country, and they were like, but guess what? We've been issuing bonds for a while, but sometimes we look back and I'm like, what do we do with the money? We can't see anything. We issued a lot of bonds. So bonds in more advanced economies should results. Good results in terms of overall development. Bonds in our own economy is showing nothing. And so then Sukuk then becomes important, because Sukuk must be backed by the assets, by particular assets. Some scholars have defined it in several forms. You need to be asset backed, you need to be asset based. Do you have recourse on the asset? Should you not have recourse on the assets? Some scholars have said, hey guys, don't stress yourselves. Sukuk is Sukuk. It's asset backed, asset based, as long as you can see what you're doing with it. You can see the roads, in case of Nigeria now, which is fantastic, So I was speaking with a client the other day, and I said, well, let's use your lovely land to do a lovely sukuk, And I said, I love sukuk. He's not a Muslim, by the way. He said, I love sukuk because we can see what sukuk is doing, So if you look at it from that angle, you have achieved solid results in developed economies with bonds, right? Now, in the case of our own economy, you've not achieved that. And so we're thinking Sukuk can be a good replacement of bond, because you can then see, and that's because, like I mentioned, because of the weak institutions that we have, you can then start to see the result. Yeah. Now, for more advanced economies, the interest in Sukuk is not that bonds have not done well, it has done fantastically well, but that they're able to attract extra funding, from, especially the origin, Yeah. So because they're able to attract that, it then becomes an attractive instrument in the market. Yeah.
Fantastic. So I just wanted to follow up on something you mentioned very briefly here. So you were talking about a colleague or a client who is very much interested in sukuks but isn't a Muslim. So my question is, who exactly is Islamic finance for? Is it limited to a particular group that shares an interest, or is it something that's open to everyone?
I like that question because just barely 14 years ago, when we did the first propositions, one of the banks I worked with, I did the proposition, we looked, we had consultants from, other countries, we did this massive, lovely research, well articulated, I was in the front of it and I enjoyed it so much, and I spent a lot of time and energy on this research, just because we want to build products, right? And so what we did was we looked at the population of Nigeria, we looked at the Muslim population, we looked at the adult Muslims, we looked at income levels, we looked at the income pyramid, and said, okay, yes, this is the target market. These guys, we're going to give them Islamic finance, they're going to buy it, And then at that time, we had EFINA, Enhancing Financial Innovation Access. EFINA came up with their, unique financial inclusion research. I think the first was 2010 or 2008, second was 2010. So every 2 years, they did this national research, financial inclusion. They realized, okay, the bulk of the unbanked are from this segment of the market in this part of the country, and we can, so the plan was let's financial inclusion, let's make people to be, let's put them in the financial system, the formal financial system. Now, what a lovely research that we did, right? But what we realized? It was a mistake because, the market was actually for everybody. So by the time I go, I moved to another organization. I said, hey guys, we're not going to bother ourselves with the Muslim market because we'll have been wasting a lot of time, which I've experienced in the past. I said, no, we're going to create products for everybody. Everybody. In finance or in business strategy, what we call symmetric competition and asymmetric competition. Competitors within your field, symmetric. Asymmetric, other competitors that you don't even see. The fintechs and all of these guys don't even realize that they're there, right? Now I'm going to come back there as we go on, right? I'm going to come back there. But so at the end of the day, we realize that, hey, those that bring the deposit, many of them are Muslim segment, no problem. Those that bring the deposit. And then those that use the assets, if you like, what we call loan, we don't call it loan, assets, those that you give facilities to, you realize that most of them are not on the Muslim market. Well, let's give a typical example of the first to cook in Nigeria. The first federal government to cook. About 93% of institutions that bought the sukuk are conventional institutions. So if you look at the sukuk market as, being different from, say, banking, right, core banking, even the liability, right, came in from the conventional institutions. Over 93% of it. By the time we had the next one, over 90%. Started to reduce over time. But even the last one, I think it's still about 80% from the conventional institutions that invested in sukuk. Yes, federal government guarantee, it's secure, you can see the asset, the governance, is unique and fantastic. So everybody bought into it. Of a typical bank, Islamic bank, or non-interest bank in Nigeria, including the asset management companies, till today, you still have over 80-90% of those that use the product to come from other faiths, other than Islamic faith, which is amazing. And so that's justified, or that validated, or that validates, the perception that Islamic finance is actually for everybody. You've got good products. Yes, in finance, it's what called differentiation of business strategy. Yes, it's different. Yeah, pricing is good. Everybody is fine. Risk is well covered, well mitigated, inherent and residual risk. Everybody is happy. Good to go. So it's for everybody, really. Yeah.
Fantastic. Okay, so another question. The Islamic finance market in Nigeria boasts of a market size of about 2.3 billion naira. I mean, it's not much compared to what was already quoted for, the global market size. And this estimation was at the end of 2021. And there are mid to moderate growth projections for this year, 2022 and 2023.
Yeah.
We've also seen that the federal government has driven market engagement through the issuance of its own government-backed sukuks, while the central bank continues to provide an enabling environment for the emergence of non-interest banks and other financial Islamic financial institutions. So in spite of all these things that have been done, to deepen the market, the Nigerian market for Islamic finance is still considered to be in its nascent growth stage when compared to the likes of Morocco, Sudan, and the countries you've already mentioned before, like the UK, for example. So there is still this constrained demand for Islamic finance products, while market awareness and understanding remain significantly low. So how do you think Islamic finance awareness can be promoted? And who do you think should take this responsibility?
Okay, fantastic question. So as a player in the market, I get worried myself, and something I realized, when you do something the same way all the time, you get the same results. It means I have to change your ways, basically. The strategy needs to change. Yeah, so you're right. If you look at the market very well, Islamic financial institutions are still they're still babies. And you compare them to the conventional space. If you look at the asset size, for example, we're still at barely 0.7% of the Nigerian asset size. So the conventional guys are doing 100 naira, for example. We're doing less than 1 naira. If you look at the debt market, or the bond market, compared to the sukuk market, thank God for the federal government sukuk. That has helped us to increase the figures a little bit, which is still less than 2% of the, and of course, don't forget that the bond market is still going to be growing, and the commercial banks, the conventional commercial bank will still be growing. So Islamic finance does not grow at the same speed. The growth is still going to be marginal. We didn't set 10-year master plan that was a while ago, some 7 years ago or so. The plan was to have 25% of the market. So the only Islamic finance will have 25% of the market, on the SEC side. And 7 years later, we're still, if you look at it very well, we're still very far from it, too far from it. It's still going to take a bit of time to hit the target. So what I think needs to happen at this point is a change of strategy, and so it's not enough to actually understand all the Islamic finance terminologies, and the rules of the game, the contract, have the lovely, Sharia governance in place, then you get started. It's nice, in a good way, so we started that way. I think the first major challenge was that, okay, let's even start to have non-interest banks. Of course, Governor CBN then, his Royal Majesty was very helpful in getting a lot of things done. And so people started to have the license, from two banks, in the beginning, in 2011, two banks, a window and a full-fledged. There was gradual growth. Now you have a lot more full-fledged Islamic bank or non-interest banks. The capital, of course, the capital was made lower so that, Islamic banks can at least get started, which is a fantastic thing. The good thing is that over time, we said to increase the capital, which of course. Now, going specifically to your question, the strategy basically needs to change. We need to then start to look at, in strategic management, what we call, the vulnerabilities that you're exposed to, right? You're exposed to certain vulnerabilities, if you like, what we call self-other than social context, whatever that means. It means that I want to look at psychological vulnerabilities, organizational vulnerabilities, and of course, political vulnerabilities, In other words, you want to look at your predictable surprises, the surprise that is coming to you, and it's surely going to come to you, and they want to sell those, how you're going to cross those hurdles, in a manner that allows you to stand strong, right? For that to happen, strategies needs to change, So why is the asset size low still? Yes, it's growing, no doubt it's growing, but is it growing, in the same speed with the conventional one? Well, maybe not, but it's growing. Growth can be very marginal, you know what I mean? And growth can be sharp, right? So the growth is not sharp yet. And okay, the good thing is that you have more players coming in. In the asset management setting, for example, you have a lot of asset management companies that now want to offer Sharia compliant funds, which is fantastic. That will surely help the growth. We have, everybody doing real estate. I want to do sukuk, because asset bank, I see the assets, you put the title with some trustee somewhere, and everybody's happy that, okay, yeah, it's covered. You can examine cash flow, you can have recourse to the assets when the thing goes bad and all of that. So yeah, we're seeing growth, but the vulnerabilities, the expected, the predictable surprises are yet to be addressed in terms of, are you all just going to go, will all the Islamic bank just go to, say, Islamic Development Bank or ICD and say, give us some money? Yeah, you get some money from them, but do you want to just target the globe and say we need a lot more foreign direct investments into the space? We need a lot more guarantees. Can you imagine if I'm a bank and I sit and say, $200 million worth of guarantee. You know what I can do with that? I can perform magic, right? In terms of expansion of assets, do you want to look at lines? Give lines. What makes a transaction compliant? It's just a thin line between the conventional and Islamic. What makes it Sharia compliant? Just a thin line, a rather thin line. Do this, it's compliant. Do this, and don't do that. And all of that. In other words, in terms of foreign direct investment, funds beyond Nigeria, in terms of guarantees, in terms of trade lines, in terms of treasury lines, we have never started to look at them. Yeah, maybe because they also set certain CBN regulation in terms of how much money you can bring based on your capital. How much foreign borrowings, if you like, don't mind my word, foreign borrowings, which should not be more than 125% of the capital. So if the capital is low, it then means that it's going to become difficult to bring in some of this. But let's look at it. It then means that capital must start to go up. Capital must start to grow up aggressively, right? And then can then start to create a lot of other things of balance sheet in form of sukuk and all of that. So what's going to be the motivation for a non-interest bank in Nigeria to do a sukuk when you sit on current accounts of 70% of your total liability? That's cheap fund. If you're going to do sukuk, it's going to come at a cost. Today's cost 30, 40, 15%. Meanwhile, even your investment account, your Mudaraba deposit, is sitting at 5-6%, 7% sometimes. We always fight the Islamic bank to say, hey, give us more returns. This is too small, and so when the liability is a lot cheaper, there's no motivation to want to do sukuk because it's too expensive, But to have, since we can then start to attract, again, what happened in federal government sukuk, when we then show that money can come in from the conventional space, you can then start to take a large chunk of the cake from the conventional side into your own space. So it then becomes very necessary to do a lot of these lovely instruments, CPs, commercial papers, sukuk,
so ESG
notes, funds,
in the
Sharia compliant. So a lot more players can come, a lot more funds.
Firstly, do the ESG principles align with the tenets of Sharia? And is there a corresponding drive, in the Islamic finance industry to incorporate ESG principles into products and services being offered?
So let's start with ESG. What's ESG exactly? So we're talking about social factors, supply chain, standards, labor standards, health and safety. You're talking about human capital development, all of that. On the one hand, on the other hand, looking at environmental issues, climate change, natural resources, pollution, wastes, and all of that. And again, on the G side, you're looking at overall corporate governance. You're looking at corruption, identity. You're looking at executive pay, board diversity, business ethics, and all of these things, right? Now, it's what we also call the genealogy of the Maqasid. What Sharia scholars would call the Maqasid Sharia. Maqasid Sharia is the intent of Sharia in the first place. What's the intent of Sharia? The word Sharia scares a lot of people. but the primary intent of Sharia is simple. Guess what it is? Is to have, nice human well-being. To achieve human well-being, for human beings to be happy, and communal good life, and for communities to be happy, safe. They should enjoy themselves. On the one hand. On the other hand, the Maqasid is then based on, 5 lovely foundations. One of it, is the enhancement or the improvement or the promotion, or the safeguard of the human self itself, human beings, to safeguard human beings, to make human beings exceptional, unique. One of it is the preservation of faith. Right? Faith is that's what everybody preaches, just faith, which is good, but that's just a part of it. Enrichment of intellect, soundness of mind, to be able to get things done, right? I'm coming to your question. The safeguarding of posterity, future generation. When you talk about future generation, it then starts to take us to the environment, everything that has to do with the future, the people. And that's why I call it the genealogy of Maqasid. From the word gene, trace, something of that nature. And the last one is the expansion of wealth. How do you explode wealth? If you know what I mean, in a manner, in a fashion that is compliant, that is ethical, following the rules, the general rules, overall governance. So in my organization, I looked at everybody sometimes. I say, okay, you don't seem to have enough women, enough ladies here. You need to bring in a few more ladies. I want to do 50-50 rather than the norm, which is basically, I think, 35 thereabouts. Like, hey, I want to do 50-50. To balance things up, in management, and in overall staff, right? So it's allowed under Sharia, Islamic finance. The rules of ESG aligns perfectly well with the Maqasid. The Maqasid is a bigger foundation in which all of these rules align, perfectly well. Again, going back to supply chain standards, labor management, it's covered perfectly well under the unique way in which wealth must be expanded, right? The human self, what are you must respect the human self, right? You must provide the good things that the human self wants, So sometimes it's surprising when you hear or some of the things that people say the Muslims are doing this and be like, hey, it's not possible. You can't be a Muslim and do this thing. That the rules are there, which centers around again the Maqasid. Again, a lot of works have been written from 1111. Thereabout, by the likes of Al-Ghazali, into the works of Ashatibi, and of course more recent scholar, Professor Chapra, and of course a lot of us have done a lot of work in that area. But yes, on the platform of the Maqasid Sharia, or what I prefer to call the genealogy of the Maqasid, right? On the platform of that, everything under ESG fitting comes or glues to it perfectly well. So again, all of those things are part of overall costing, of course, part of Islamic finance to a very large extent. That's why I also talk about the expansion of wealth. That expansion of wealth, addresses any issue that has to do with corporate governance. So we're not talking about just expanding wealth. So in Islam, there's something about earning halal and spending halal. So it means that your earnings must be Sharia compliant, your spending must be Sharia compliant. Of course, that means there should be natural corporate governance setting in place. Very natural one, without any, without even stressing yourself. It should be a process. And if you then look at also the kind of Sharia process we go through to get people approved, the Sharia scholars will say, hey, wait a minute, we want to protect the customers. The bank wants to make all of this money. The fund wants to do very well. But hey, the customer, on the lifetime of there's a particular case where we had done the product, sometime, and there should be, if you have to redeem early, you redeem your investment early, you have to pay penalty. And one of the Sharia scholars said, hey, why should you pay penalty for redeeming early? The Sharia scholar could not comprehend it. As somebody needs money to sort out personal matters, he has come to you to say, give me my 1 million naira back. I can't wait for 180 days anymore. I've only invested for 30 days. Why do you then want to charge that person? The scholar cannot comprehend it. And so, so there's a natural governance in place in Islamic finance and the overall rules around the Islamic economic system. At least theoretically. Practically, that means that we need to start to absorb a lot of these things and start to implement them better. Start to give women a lot more right and a lot more power. Again, I look at Islam, I'm like, do we even really have a gender-based fund, just for women, doing very well that, a woman will not walk away from her obligations. She will always be there, to face those realities. Have we done these things? Again, they're yet to be done. When we talk about climate-related transactions, having green-related transactions, have we really gone into that? So I think what has happened practically is that there's a big conflict here when you start a new non-interest financial institution. So you want to make profit. You want to please your shareholders, first and foremost. You want to even before then, you want to be able to, you want to survive first. The minute you start to survive, now, okay, at least I can pay my salaries, I'm surviving well. Then shareholders say, hey, Mr. Man, you're not making enough money. You don't want to please the shareholders. And then you then realize that, but you've not done, you've not even done transaction that has to align with nature, right? Yes, so there's a conflict between profitability, impact, and even poverty reduction. So one of the articles I did a while ago, the title is, Can Islamic Finance Reduce the Poverty Challenge? I struggle to find an answer to that question in our own world, in our own developing economy, if you like, struggling economy, and so how can we have this impact? How can we come up with products that yes, you're going to make money on the one hand, but yes, also you're going to impact a lot of lives on the other hand, which again, that's Makassid. So the Makassid theoretically has provided that window, to absorb everything under the ESG, but practically, the impact of it has been rather limited. But again, that's another very important area that we need to, speak to ourselves about, to say, hey, brothers and sisters, this thing needs to be fixed. We need to fix it. We need to start to align with all of this, because it's part of the overall framework, of the Islamic economic system, So yes, to answer your question, there's space for that, and we should do more of it, really. Yeah.
Okay. Thank you. So I think we've come to the end of our session for the day. Thank you so much for making time to join us, Dr. Oshodi. This has been the most engaging and insightful conversation. And to you out there for being a fabulous audience, remember the conversation continues on our social media pages. Do not hesitate to send us your comments and thoughts on today's episode. Have a good day.
Thank you for listening. This podcast is brought to you by Deal HQ Partners. To find out more about our services, visit www.dealhqpartners.com. See you on the next episode.